Hello everyone, so welcome to my video. Today I would like to present about tax for investment in build, operate, transfer, or we can call BOT. We are from group 10, consists of Sylvia Priskagani, me as moderator Atika Zara Ramli, and Mustafa Kamal. So the first one is I want to tell you about definition of BOT based on decree of the Minister of Finance number 248/KMK number 4/1995, Joe Circular of the Director General of Taxes number SE 38/PJ number 4/1995 concerning treatment of income taxes on income related with the concession to BOT. So, what is BOT? BOT or Build Operate Transfer is a form of the cooperation agreement between the landowner and the investor stating that the landowner grants the investor the right to build during the lease agreement and transfer from the ownership of the building to the landowner after the lease of period is over. So, I make a conclusion that BOT is a form of project financing wherein a private entity receives a concession from the private or public sector to finance, design, construct, own, and operate a facility stated in the concession contract. Okay, next is BOT parties. BOT have two parties, which is the investor and the landlord. So, the investor who are given the right to build and use or operate the building during the lease of agreement, and the landlord that grants the right to investor. Okay, let me tell you something. There is BOT and BOOT. As we know, BOT is the Build, Operate, Transfer, and BOOT is the Build, Own, Operate, Transfer. As the title differentiates, the BOT operator doesn't own the facility during the concession or operation period, whereas the BOOT operator will be the owner of the facility during the concession period. That's the major difference between BOT and BOOT. I tell you this because I don't want you guys confused when find BOT and BOOT. Okay, next is tax aspect for the investor when the investor's income related with the BOT agreement is the income received or obtained by the investor, including one is rent and income, connection with the use of property. The second is income related to building concession, such as income from hotel operation, sports center facilities, entertainment venues, and so on. Okay, next is the substitution or compensation received from the holder of land right if the contractual period of the BOT agreement is shortened from the determined of the period. Okay, that's all from me, and the next slide will presented by Mustafa Kamal. So, Mustafa Kamal, time is yours.
Tax aspect for right holders of lands. Income received or obtained by the land right holder can be in the name form of 1. Regular payment made by investor to right holders of land in or during the BOT period. 2. Part of building rent. 3. Portion of profit from building concession with names and in any form that have been provided by investor. 4. other income in connection with the both agreement for the transfer received or obtained by the holder of land right. Next, tax rate. The amount of the income tax rate (PPh) owed at 5% of the gross amount of the highest value between the market value and the NJOP of the building portion submitted by the holder of the land right is the acquisition value of the building for the holder of the land right. A payment of income tax of 5% made by holders of land right on the surrender of building made by investor. For individual, taxpayer is final, and for corporate, taxpayer is the payment of Article 25 income tax that can be calculated with the income tax payable for the relevant 10th year. Excluded from the imposition of Article 15 of income tax on companies that invest in the form of bought by 5% if the holder of land right is a government entity. Knowing that tax aspect of this wake up investment can add to our insight about other types of investment other than funds, so that when investing in this type we will not get lost in reporting on tax and we can become taxpayer who obey the applicable tax regulation.
Deposit and reporting procedures. Reporting must be submitted by the date 20th of the month in which the tax payment is also made. However, the due date for the tax payment itself varies. Be paid by the taxpayers no later than the 15th of the month after the build-operate transfer period ends. In the event that building which built by the investor is not entirely the investor right, but part is handed over to the holder of the land right, then the income tax owed must be paid by the holder of the land right no later than the 15th of the following month after the surrender. Continuing tax rate. For individuals, income from buildings received from investor is subject to a 5% final income tax. This income is still reported in the annual tax return, but the reporting is separate from the general income tax. As for corporate taxpayers, the 5% income tax is considered as Article 25 income tax, which is the current year income tax installments. For income in the form of buildings received from investors with nominal market value must be combined with other income in the annual tax return. Once combined, a net income is sought and then subject to Article 17 of the Income Tax Law.
Okay, that's all from our Group 10 presentation. If you guys have a question or suggestion, comment down below, and thank you for watching.